Hello everyone, welcome back to the YouTube channel. Don't forget to subscribe to the channel and hit the like button if you want to see more videos like this. Got a brilliant video for you today. We're going to quickly go through my results for December, but I've also got some amazing crude oil analysis for you. So stick around. Just going to spend a few minutes going over December. I had a lot of people ask me about how my performance was during the last couple of months because we had a lot of political risk essentially to overcome many hurdles. So it's worthwhile just having a look at some stats. Fully audited, as you know, the only trader in the world really showing this stuff publicly, worth noting. But I'll come back to that. And then we've got the crude oil analysis. So look, maybe not as polished a video as a couple of my last videos. I think we had Forex for beginners and futures versus Forex. But look, as with all of them, I want to keep it unscripted and kind of just see where it goes. So I try to keep it under 10 minutes. I always say that ends up going on a bit longer, but we'll try and keep it as short as possible. So definitely worth sticking around. Let's have a look at my stats and then we can look at the crude oil trade and then I'll let you go. Now, before I do that, just wanted to say, look, Happy New Year. It's the first video I've really put up on the channel since the turn of the new year. I know that COVID issues are still there for everyone, so I hope you're keeping safe during lockdown, and just wanted to wish you the best for 2021 before I got into things. So I'm going to show you my stats for December. I had a lot of people asking about performance in December. And basically, as you'll see in a second, it was 57%. I also have November results as well, but some really interesting takeaways from there. So definitely worth looking at that. And then we'll just cover the last few bullet points. We'll get into crude oil. So let's get into the stats. So what I've brought up here is, as many of you who've followed the channel for a while will be familiar with, is my FX book. And as you can see for December, it's basically 57% or just under 56.99 with a drawdown of 9%. And as you can see, the full history, no open trades, no open orders, and the history showing that I made a withdrawal on the 4th at the end of the month, and obviously all the trades there. So some real interesting takeaways from this month. And before I get into that, as always, you can see everything's fully verified, using one of the biggest brokers in the world. So I get a lot of garbage posted and asked about this and that, and honestly it's just a waste of my time. I have a business to run. I don't bother with a lot of the garbage that's posted because what is the easiest way to answer it is by doing these videos and obviously showing stats, which, as we know, no one else in the world is doing. So it's nice for me to do this as a kind of to help people, but also to obviously reply to a lot of the nonsense I've been seeing recently. So yeah, it speaks for itself basically. So some of the key takeaways, let's really get into it for the more serious of you who actually want to take advantage of the fact that someone like me, a professional trader that's been doing this for years, is actually showing this stuff. Putting aside all the retail nonsense, as I call it, what can you actually learn from this? Well, what you can see is that, and I mentioned this a few times to a lot of the people who subscribe to my email list and so on and so forth. As you know, throughout the month, I like to keep people updated, and you can see that on my Instagram as well if you follow me, is I didn't actually trade between the 16th and the 30th. Another reason that it's really important to kind of only follow advice that's backed up by stats, because a lot of people may be telling you things you don't know if it's necessarily true, right? Here you can see is categorically the case. I did not trade between the 16th and the 30th. I do trade S&P 500 and crude oil, and I may have dabbled a little bit in those markets, but in general, as you can see, I wasn't very active in the markets, and there's a reason for that. So I'm blocking it here. December was the month of political risk, and it's really important. So number one key takeaway is, look, I didn't trade throughout that period. I'm very mindful of the environment we're in, whether there's event risk with news, whether there's political risk. Again, can be some overlap with event risk. So we kind of had the uncertainty of the elections in November, December. We also had Brexit going on. So if I put here US elections, we had the Brexit. And sorry, you'll have to forgive my writing. That does say Brexit, but may not look like it. We had the vaccine news coming out, so there was a lot of volatility, but it wasn't one way, right? And this is what's really important to note. So, as many of you know who've done the G7 program, I don't really follow news in depth. When I worked in investment banking, I did. I used to know things like inflation down to a pint of milk and how much the price of that had changed, or petrol prices had changed, and the individual constituents of the inflation figure. That's the sort of detail I used to go into. But as my trading has become kind of more intraday in nature, I've found a lot of that to not be as important or useful. However, what I found to be useful is at least kind of have a broader picture of event risk, political risk, what's going on. So I just want to give you a bit of an insight into what was going on in my mind in November, December, because I had a lot of people say to me, hey, I had a lot of skeptics, basically. It's sad the way people pose questions to me. I want to firstly acknowledge the 99% of you who are very polite. And if you've got questions, people ask me in a constructive way, and I always give answers when I can, obviously time permitting. But what I notice sometimes, especially as G7 has grown, is a lot of people say, hey, what were you doing in November, December? I bet you blew up this account. It's complete garbage, all right? I mean, can't they just wait for January for me to actually get 5 minutes, right? Because I don't actually have time to do videos every single day. Obviously, this is the first opportunity I've really had to do a proper video for YouTube in a few weeks. So it's the first opportunity I've really had to get into this detail. And look, I've got the stats, I can show it. That's why I said I do this as sort of a reply to some of that. The way people ask me, it's just completely ridiculous. You wouldn't see that in a professional environment. I have to admit, it shocked me a little bit, but whatever. The point is, and got a bit sidetracked there, apologies. But look, the point is that I want to give those of you that are quite serious about this a proper insight into what was going on in my mind in December and why I was able to navigate it when so many people were having disastrous months, right? How do I avoid that? Well, firstly, I don't trade when I don't need to. So as you can see that there, but more importantly, I'm aware of political and event risk throughout the year. March, as many of you know, I said I'm not trading. I knew that coronavirus was there. There's a lot of heightened range in the market, range that if you look at the distribution of normal ranges, we were at 3-4 standard deviations, right? Very unusual event, so I didn't trade at all. Here, whilst I didn't see that type of elevation of ranges, what I did notice, or what I had in my mind, was that, hey, there's a lot of sort of elevated news coming out. When I say elevated, I mean relative to what is coming out in a normal month or a normal week. We've just got things like payroll, jobs data, inflation data, normal things to deal with that the market kind of easily brushes aside. You don't have election risk to deal with every year, every month. It's quite a unusual risk to come up, so you've got to be aware of it. Brexit, okay, it's been around for several years, but it's gone quiet. But it's been at the forefront because a deal was about to be done at the end of December, because obviously, come what may, by law, UK was coming out of the EU on the 1st of January. And then finally with the vaccine news, right? I mean, we had a long period of time where there's a lot of speculation about the vaccine, but people were talking about a vaccine maybe being produced at the end of 2021. So all of a sudden in December, we had all of the vaccine news saying, hey, it could be a lot sooner. So can you see it suddenly became relevant? And then the number of items here, you've got several items. And then finally, I know I've talked a lot, but look, to me, this is really important, right? Trading isn't a game that I see a lot of people say, hey, you just get up in the morning and you do this and you make money. No, it's not. A lot of thinking involved, just a lot of like analysis, and maybe not written down analysis, but just, doing a lot of thinking, and doing it in a sort of slow manner, so that when you do take a trade, it's a calculated risk, right? Look, at the end of the day, we all know trading is a risk, but it needs to be calculated. The more thought you put into it, and have discussions. Sometimes I'll talk to people about these items and say, hey, what do you think? I won't let it affect my trading decisions, but at least it's something that I think everyone should be doing. And that's why I've put this video together, because hopefully it gives you some ideas around how you can also in the future have a think about these items. So look, coming back to the point, how did I actually navigate these items? Well, what was going on in my head was that, okay, these items are there, but are they all one way? Look at January. January, you can see the market's been rallying quite a lot, right? The stock market's making new highs all the time, and because the news has generally been one way, in essence, the elections are out the way. The vaccine news has pretty much been accepted as being a positive. Why? Because all the drug agencies have signed off the majority of the vaccines. They're already starting to roll out. That wasn't the case in December. Same with the election uncertainty, where Trump, we weren't certain whether some of his legal challenges were going to be successful or not successful. So that uncertainty was there. And then obviously the Brexit thing, we didn't know whether the deal was going to pass or not. In January, it's done. The deal's done. So you can see January, the market's rejoicing all this news, whereas in December, that wasn't the case, right? It was two-way. And I'm saying all of this because this is what I was thinking to myself in December, okay? I was sitting there thinking, Envy, this news could go either way, any of these three items. Therefore, don't get too biased in one way or the other, okay? So that's why I want you to stick around for the crude oil trade, because that is going to become apparent. But now that I've got all of that out of the way, so look, the point is that, as you can see, I took a little bit more on the short side than I did on the long side. But the reason I talk so much about those fundamentals is it's reflected in my statistics, okay? It was fairly balanced. If anything, I took slightly more shorts than I did longs. I didn't really have a strong bias. If you look at some of my previous my FX books or my trading, if generally I think the sentiment is quite positive, then you'll see that reflected in my stats. I will be going one way, whereas December was very uncertain, and therefore it's reflected in my trading. So that's my point, is look, have a kind of feel for what the sentiment is in the market and trade accordingly. Don't get too caught up, right? In December, November, there's a lot of uncertainty. Trade it accordingly. Don't get obsessed with, no, the market has to go up, the market has to go down. No, there's a lot of decision making that needed to be made at a political level that we weren't sure of. So hopefully that's really useful for you. I know I talked a lot, but I wanted to do a real solid video this month, just because I got a lot of questions around December saying, hey, Envy, you disappeared for a while, what happened to you? Are you still around? Well, yeah, I'm still very much around. I had a fantastic month because I've been doing this for long time. I know how to deal with these type of risks. As I said, I just wanted to highlight those two major points. One being, in this type of environment, don't trade, overtrade. Be aware of the risks. Number two, if there is uncertainty, don't get caught up by one bias or the other. You can see I was fairly balanced. And then the final point I wanted to make, right? So let me just go to my main page. How do I get back to this? So I'm not too familiar. Okay, there we go. Okay, so add blocker in there. So yeah, here we go. Sorry, apologies about that. So as you can see, I've got all the stats here. So November was, I had a little bit more drawdown than I would have liked, and then same for December. You can see the last sort of 3 months, really, my drawdown has been slightly higher than the earlier part of the year. And a lot of people ask me why I split out the months. I've said it many times before. There's a plethora of reasons. And look, at the end of the day, the results are so like significantly positive in alpha that it should be obvious why this stuff is split out. You know, when you're making this, generating this sort of alpha, it doesn't make sense to be doing things like compounding. If you're doing 2% a month, I understand the argument around compounding. It makes complete sense because obviously by compounding you can get yourself to, you know, high double digits in 1 or 2 years time. I'm doing that in a month, right? I'm not going to double my size every month. There's psychological things, there's practical things, there's liquidity restrictions, there's so many things, right? Why I don't do that. But another reason that I've been quite vocal about as well is I like to split it out so I can monitor my drawdown. It's very normal in a professional environment. At the end of the month, you'll have a look at risk adjusted performance. So my point anyway is that I had slightly higher drawdown than I would have liked, and I like to split it out because I can see straight away that you know, in some parts of the year, in particular in the middle part of the year where things were quite settled, I had a lower drawdown, and I can see looking back at it when I do my reviews that, hey, what happened in December? You had almost 10% drawdown. November was very high. Do I need to make any adjustments? And look, I have spent maybe 100 hours over the last month. That's how much I dedicate to my craft, even after 20 years. I spent over 100 hours reviewing some of my trades. So I'm not going to sit here for 100 hours and go through it with you. So forgive me for just giving a very macro kind of analysis, but so it will sound like a very broad analysis, but I do go much deeper than this. But the point is that the conclusion I came to after looking very deeply was that I was probably okay when I was taking my risk, looking at some of the things. Could I have done things differently? Probably not. I was quite satisfied with the amount of drawdown I was taking on individual trades, individual days, because I had a look at some of those political risks, event risks. How long was I holding on to trades? What was my maximum adverse excursion, which I've talked about in the past? A lot of things I went in depth into, and by splitting it out into a month, a lot of these things, I can compare these things over months and see if I could make slight adjustments so that January can be better. So I came to the conclusion that most of it was down to the political and some event risks that I talked about. And that's why I went into so much detail. So look, I really appreciate you stuck around for that, but you know, hopefully you can see it was for your benefit as well. I don't hear anyone talking about any of that stuff. If you do, let me know. People talk all sorts of garbage about my results and try and challenge me, and I'm open to it, right? As anyone knows, I'm the only guy who welcomes all due diligence, fine. But whenever I say to anyone, okay, show me anyone else who can actually replicate this, if it is as easy as people claim it is to do, people go silent because it can't be done, okay? Even people talk a lot of rubbish about, you know, perhaps I'm looking at 100 markets and showing one. Come on, I mean, it's complete nonsense, right? You've got more chance of winning the lottery than being able to produce these type of effects. But people need a reality check. That's why I call it retail nonsense, because not only is there a lot of nonsense in terms of methodologies I see people using, you know, everyone knows I'm not a big fan of technical analysis, and I've got into a lot of detail around that as well. It's the mindset as well of, hey, why are you doing this? Why aren't you doing that? Why aren't you showing account sizes? And all of this stuff is such a toxic mindset to have. It's better if people actually spent time utilizing some of that energy in learning how to trade. You know, for many years, the final thing I say before we get into the crude oil, and I promise we're going to start the analysis now, final thing I would say is that for many years when I was in a professional environment, I didn't even look at social media, okay? And if I didn't like something that someone did, or I'd ask them politely, hey, can you explain this in a little more detail and whatever. At the end of the day, there's some sort of professionalism in a professional environment. So hopefully people can see that I was very much around in December. If you've got any questions, you can see I'm always happy to answer them. I go into a lot of detail in these videos. If you want to drop me a message or my team, don't hesitate to contact us. It's normal to have questions about the statistics or whatever. We're always happy to answer. So I hope that was useful. Let's get into the crude oil trade, then I'll let you go. Okay, everyone, thank you for sticking around. I'm going to make it worth your while. I know I spoke a lot before, but hopefully you realize, hopefully you see that it was for everyone's benefit. I love trying to help people who really want to get a feel for what true professional trading is like. So I'm going to show you some amazing stuff right now. It's really important that I did say, and I went on and on and on about all that stuff about the political risk and event risk, and you're going to see the benefit of that here. And a lot of that was because if you watch some of my previous videos, you will see I talked about balanced environments and imbalanced environments. And I won't go into a lot of detail here, but simple auction theory, which applies to people don't realize it's happening all around them, right? Whether it be if you're shopping on Amazon every day, companies like Amazon, whether you're going to your local shop to buy bread, milk, food, whatever it is. Prices are always typically, as you know, they'll be quite sticky in the real world. So if you have price and then you've got time, typically price there'll be small gyrations, but it will typically be quite sticky. And then there will be obviously offers on and things changing all the time, which cause it to go up, and then it will come back down, and then it will go up and down and up and down. Basically, it will be changing over time, but within the same range. Financial markets are no different, right? You can see it here. And in fact, there was a larger range here before we kind of broke out. And that's happening in all goods and services, right? Unless there's big structural changes, typically the prices of things that you look at on Amazon, they never stay the same, do they? It might be $101 one day, $99 the other day, $101.99, $101.99, but it won't go to 200, right? That's my point. It typically tends to stay around the same area for long periods of time. That's what the market does until there's a structural change. Same on Amazon. We won't go into the details in this video, but and I talk about this in the G7 course a lot, is when there's obviously structural shifts, the price will then change because fundamental factors that are like factors of production or demand factors, it could be anything, right? It could be population changes, it could be whatever. I mean, we won't get into that right now, but big structural changes can cause that price to shift. And even if it shifts, it then starts to go into balance again, right? So my point is that what I was saying when I was showing you the MyFX book results around political risk and event risk was so important, because those risks were fighting with each other. They weren't clear one way or the other. They were potential structural changes, weren't they? If there's a new president that comes in, that's a big structural shift in the landscape. If the relationship between the European Union and the United Kingdom changes, big shift. If a vaccine gets introduced and coronavirus dies down, and let's all hope it does, big structural shift. But if all those factors are clashing with each other, and then even within themselves there's uncertainty, the market's not going to really go anywhere, is it? And that's why it was so important that I talked about all those things, because if you actually look here, and I apologize, I cut off some of this, so you'll have to take my word for it. But if you go and have a look at your crude oil chart or the S&P 500, up until this area basically, and let me just make sure I haven't chopped myself off. No, I think we're okay. Yeah, I think that's okay. Up until this area, it was still December, and then this becomes January. And think about it. Everyone reads the newspaper. Even if you don't read it in detail, what happened in January? Things changed. Uncertainty went away quite a bit, and look what's happened. Crude oil, even other markets, as you know, the S&P has risen to all-time highs again, and so on and so forth. But in December, that didn't happen, did it? In December, we had a lot of uncertainty. And look, on the market profile, which is, again, look at the previous videos, I've talked about this a lot, it's just a different representation of price over time, okay? That's why I say to a lot of people, you've got to be careful with indicators and things like that. This is just the VWAP, which you can Google. It's a heavily used institutional measure of the average. That's all it is. It's not a technical indicator per se. There's only one setting. The VWAP for the day is the VWAP for the day. There's no like 21 setting, 20 setting, 15 setting. It's the average, right? Everyone day to day talks about the average of something. If you see 200 observations happening and you're trying to tell your friend about a way of describing those 200 observations, you're not going to sit there and tell him all 200 observations. You say on average. That's all the VWAP is, which is this. Right, here kind of helps me just all professional traders. It's heavily used, right? You'll see this if you walk into a professional firm and you go and watch professional traders. They're all using the VWAP, and essentially what it's doing is it's giving me a nice sort of measure of, okay, that's the average over a particular range. And where are we? Well, we're at the extremes. We're away from the VWAP. I want to get back to the VWAP. If on a broader term contextual perspective, i.e. over multiple days, what's the market been doing? Has it been in balance? i.e. are these structural events, risks that we talked about before, are they clear or are they not clear? Well, we just said many, many times as you sat through for 15 minutes, hearing me talk through that, it wasn't clear, right? So there was a lot of balance. There was a lot of range that we had during this month, which was reflected in my FX book results, right? Crude oil, S&P 500, other risky assets like the pound, Aussie, all of these, they correlate with each other. So typically you'll see the same relationship. If you looked at the market profile, very, very similar relationship. And that's essentially what I was doing with crude oil when I took this trade. I had a lot of balanced trades in the futures market in December as well for the reasons outlined here. And we got to the edge of, so these are days. Highly recommend everyone to look at market profile or volume profile if you can. Really nice representation of price, clean, right? Lets you actually see, oh, we're in balance. No like squiggly lines in the way and things at the bottom and all of that stuff, okay? You need to really have a clear picture of, are we in a range, in a balanced period? Does the event risk match that? And then also on an intraday basis, how can I actually execute that? How can I bring that to life? My sort of thesis, my hypothesis for what I think is going to happen. So look, I'm going to end the video there because I've talked a lot. I realize that. Hopefully you found it very useful. But the point is, on this day in question, which was the 30th, which was here, right here, what's the market been doing all of this time? And even most of the month, even when it tried to break out of the range, possibly on some good news on the day, the market was left disappointed and we came back into the range, right? So this is in my mind, this is here, and obviously I'm thinking, look, we're at the edge of this sort of contextual event risk story building up in December. My market profile is telling me we're very balanced on the day. How do I want to play this when this comes in? Yeah, I'm looking at things like order flow on a very microscopic level just to fine tune some of my entries, but you can see the entries here, very, very clear, crystal clear for you to see basically that took some crude oil contracts long at the end of the month, and I probably could have held it a little bit longer, but it's easy to say in hindsight, right? I don't care. I made some money and I was happy with it, okay? And I move on to the next day. Yeah, I take some notes, obviously review, could I have done this, could I have done that, but I don't let it affect me the next day, very dangerous. It's gone. Erase it out of my head. Get some sleep, start fresh again the next day, whatever. Yeah, it went up and I could have done this, I could have done that, but equally it could have turned around and collapsed, right? Then the opposite thought process is there. Oh, why did I hold on? All of that. I remember actually just thinking about it now, why, because normally what I like to do, as many of my students who are watching this will know, who have done the program, the G7 program, they'll know I like to scale out around the VWAP. And I specifically remember why I took my scales a little bit early here. It was because on this day in question, it was coming into New Year's Eve, basically, New Year's Day. So I kind of had it in my mind that volumes were going to be low, not a lot of people around. I didn't want to get trapped in any sort of irrational or volatile movement on this day just because of illiquid markets. So that's why I took the position early, basically. And I just said, you know what, I'm going to go off on my holiday now, have a couple of days good rest, New Year, whatever, call it quits, made some decent money. So hopefully that gives you an insight. I know it was quite in depth, but look, if you're just starting out in trading, I get asked this a lot. Don't really let this type of institutional analysis put you off. When I started in an institutional environment, so the last thing I'm going to say before I let you go, the things that I had no idea what any of this stuff was. I was just like a new trader myself, and look, I managed to learn it. So even if you're brand new to trading, don't waste your time looking at, quite frankly, garbage from people who don't back it up. Start with the proper stuff from day one. In my G7 program, and I mentioned the program a few times, and look, it doesn't matter whether you do my program or you do a program with another institutional firm, it's fine. I want you to do well, it doesn't matter. My point is only that I do go into a lot of the basics. I try to build you up from scratch. You won't even be on the charts at first. You'll be doing other things in the background. You'll be doing a month of preparation, building yourself up to this type of analysis much further down the line. And it was the same for me when I was in a institutional firm. They gave me a lot of breathing space, several months, in fact, as many know, because I talked about this in the program, that before I even got into this type of analysis. So look, if you're going to do it properly. Don't let this stuff put you off. You got to start somewhere. Start from the first transaction up, and don't put pressure on yourself. Do it slowly, okay? It can take a year. Sometimes it can take a few years to really build up, but once you've got the knowledge, it can be devastatingly powerful if you actually put the time and effort into actually learn this stuff, and it becomes quite natural. I mean, the way I talk about it now and I analyze it and I do it, it's very quick, but that's taken a lot of work, and anyone can get there if they're willing to put the time in. I hope that was useful, and apologies that went on a bit longer than I would have liked. Absolutely love this stuff, love sharing this information. So yeah, leave a comment, drop my team an email if you've got any questions. Have a brilliant 2021, and keep safe during COVID. Hope everything works out for you in 2021, and take care.